Your Credit Matters segment today being brought to you by rsrdebtfree.com, rsrdebtfree.com. And again, if you haven't looked at rsrdebtfree.com, it's a great service to help you. That's what it's there for, is just to give you some help on dealing with debt. You know, we've talked about the idea of doing the cash out refinance. And yeah, we've got that cash out refinance. It helps a lot of people. And it's a debt consolidation loan. Most people don't understand, and I hear it all the time, so I know that it's a big problem. They look and they say, you know, I've got a 3%, 4%, 5% mortgage rate, and I don't want to change that. And I can certainly understand that people don't want to change that 3, 4, 5% mortgage rate. But the problem is that's only one piece of the puzzle. And it's like saying, well, I don't want to take money out of my right pocket and put it into my left pocket. You know, it doesn't work that way. So it's all your money. If your household debt is at 7 or 8 or 9%, can you tell me why you don't want to be looking at something that might save you money over the long term? If your payments, and I've seen this many times, $4,000, $5,000, $6,000 a month, and you do a debt consolidation, bring the interest rate up, and you end up lowering your household monthly payments, you're far better off. I think we did a segment on this, rsr3pctloan.com, rsr3pctloan.com. And we actually went through and talked about the idea of why a 3% loan is killing people. It's killing people. And the reason most folks don't get it is because, again, they're thinking that all the money is coming out of different pockets. It's not. Take a look, and you know something, the other part of this is it does not cost you a nickel to explore and get educated. All you need to do is, if you send us your most recent mortgage statement, all of your debts, you know, and send us the credit card statements. That makes it the easiest way. Redact the account numbers. I don't care about them. And we can pull the data that we need that way. We'll tell you what your blended household interest rate is. We'll tell you if it makes sense to do a debt consolidation loan or not. We might even tell you if you don't have that home equity, well, maybe you need to talk to our friend Chris Corrales, and he's helped people get their payments down by as much as 50% and get them all paid off within 5 years. Now, do you know how long it's going to take you to pay off your debts if you're making minimum payments? Just throw that out there for you. So let's understand the different types of credit cards. If you're considering applying for a new credit card, you've likely noticed that you have a lot of options to consider. There's a wide variety of credit card choices on the market. In fact, there are so many credit cards available that trying to understand the features, benefits, and differences between them all might feel overwhelming. On a positive note, you don't need to learn every detail about every credit card to figure out which offers make maybe a good fit for you. Yet it can be helpful to learn key details about some of the most popular types of credit cards and how they work. So let's talk about them. Unsecured credit cards. The most common type of credit card is the unsecured credit card. When you open this type of card, you don't have to put down any collateral to back the account. Instead, the card issuer will approve you for a maximum amount of money you can borrow at the time. It's also known as the credit limit on the account. When you manage your unsecured credit card account well, it has the potential to help you establish positive credit history over time. But if you pay your bill late or have a high credit utilization ratio, there's also a risk the account could negatively impact your FICO score. There are secured credit cards. Secured cards are a type of credit card that you want to consider if you have no prior credit history or a poor FICO score. When you open this type of account, the card issuer may require you to make a security deposit that's equal to the credit limit on your new account. People often open secured credit cards to build credit, Yet keep in mind that it's important to avoid late payments and maintain low credit utilization ratios on your accounts to accomplish that goal. Rewards credit cards. Rewards credit cards are often a popular option among credit card holders. These types of accounts reward you when you use your credit card for eligible purchases. The rewards you may earn using this type of credit card come in in a variety of forms, including points, miles, or cash back earned as a percentage of each eligible purchase you make. Once you earn enough rewards, you may be able to redeem them for statement credits, checks, flights, hotel stays, gift cards, and more, depending on the credit card. Before you apply for a reward credit card, it's important to understand that you may need a good or exceptional FICO score to qualify for this type of account. Also, rewards credit cards, and indeed credit cards in general, are typically best for consumers who make a habit of paying off their credit card balance every month. If you involve an outstanding balance from one month to the next, high interest rate charges could quickly offset the value of any rewards you might earn on your account. Want to know how to pay your credit card the right way? rsrccpayment.com. rsrccpayment.com. And yes, even if you're paying your credit card in full, rsrccpayment.com will show you how to pay it the right way for FICO scoring purposes. Over 90% of the people who pay their cards in full are paying them the wrong way for FICO scoring purposes. 0% APR credit cards. Some credit cards may feature a 0% APR introductory period. When you open this type of credit card, you may be able to enjoy an interest-free period on either new purchases, balance transfers, or both, albeit for a limited amount of time. If your goal is to pay down credit card debt, a card that offers 0% APR on balance transfers might help you accomplish this goal. A card that offers 0% APR on new purchases could also be useful if you're looking for a short-term financing solution. If you're using it to pay off those other credit cards, be careful you don't run up the balance on the other credit cards. Keep in mind that you typically need good or excellent credit to qualify for these types of credit cards. It's also essential to pay on time when it comes to 0% APR credit cards. Not only could late payments negatively impact your FICO scores, but paying after the due date might also cause you to lose the promotional APR on your account balance. Small business credit cards. A business credit card can help you separate personal and business expenses, whether you own a brick and mortar establishment or freelance on the side of a 9-to-5 job. A business credit card could be a useful tool to help you. You might also be able to earn rewards on business spending that you could redeem for extra cash back, travel, or other useful benefits, depending on the credit card. And as an added benefit, some business credit cards might help you build business credit as well if the card issuer reports the account balance to any business credit reporting agencies. Student credit cards. Student credit cards could be a good solution for college students who are trying to build credit history and establish a FICO score for the very first time. In general, it's easier to qualify for these types of credit cards, but you should also expect lower credit limits and limited rewards with these accounts. You might also face higher APRs with student credit cards, and some student credit cards may be secured credit cards that require a security deposit to open an account as well. Bottom line, there are many different credit cards available on the market. Finding the best option for you starts with narrowing down the types of credit cards you're most likely to qualify for based on your FICO score and credit history. From there, you can make a list of factors that are most important to you, including fees, APRs, rewards, and other features. That is Your Credit Matters, brought to you by rsrdebtfree.com, rsrdebtfree.com.